higher than the previous high, and every other low is higher than the previous low. Simply, we can draw the trend line, wait for the correction to respect the trend line, and as soon as it shows an indication that it's breaking the previous high, we can simply get into the market. Tool in determining the trend. So we start to draw our trend line. We have one touch, we have the second touch here. We are ready to go for a trade here. Some, I would say, price range between certain amount of price. And how the volume would look? Well, simply, hello Elevation Trading Squad. Welcome back to another great episode with Elevation Trading. Last week, we had a very hot and very important topic to discuss. It was about key support and resistance levels. If you haven't checked it yet, I highly recommend you go ahead and check it here. In today's episode, we're going to go ahead and discuss an even important subject. It's all about technical analysis, finding key positions to enter the market. In today's episode, we're going to talk about market trend, the price movement in overall markets, how the trend is working, what factors simply affect overall market trend based on time, based on directions, and also why it's important to know the direction of the trend and trade with it, with live examples, and as well using of the volume with trend. This is all we're going to discuss in today's episode, so stay with me until the end of the video, follow me through the intro, and let's start it with this great episode. Welcome back. Market trend is very important and crucial into your trading basically profitability or results. This episode is a continuation of our Market 100 series that will make you a great trader at the end. So follow us along, stick with the plan, follow your plans. Also, make sure you hit that subscribe button if you're first time in this channel and follow me along through the video. So, simply, I ask this question at the beginning of any subject, whatever the subject. So today, what is a trend? Simple as that could be. A trend is simply, it's a recognized direction of price movements over a particular period. So simply, market trend is basically a recognized direction of price movement over a particular period. Market trends apply to all assets and all markets where there is movements on price or volumes bought and sold. So, now you know what's a trend. It's basically a recognized price movement. And trend exists in any price movement, in any market that has price movement. Doesn't matter if it is a stock, doesn't matter if it's a currency or an index or crypto. Well, finding the direction of the trend, determining what trend is at the moment is very crucial to your trading profitability. What we want to do with the trend, we want to determine the direction of the trend and we want to go with the majority. This is very, very important when we're talking about the trend. So, okay, well, why we should know the direction of the trend? Well, if you don't know or if you determine the direction of the trend wrong, then simply you will end up in the wrong direction of the market. And what will happen when you will be in the wrong direction? Simply, instead of making money in overall financial markets, you will end up losing money. This is why we need to know the concept of trend. I hope that's clear. Okay, and Now that you know the trend, what factors determine market trend? What are the factors that simply make a trend? Well, it could be many factors, but in overall markets, there are a couple of factors that highly affect the direction of, or I would say determine the direction of the trend. First is the government. Yes, well, government has a very high influence in overall markets. Well, simply, I would say most of the time, the government is in control of price movement. And how they control that? Well, within certain policies that government follow, they can simply determine if they want to accelerate or decelerate the direction of overall financial markets. And how they control that? Well, one of the most key one is interest rate, or simply monetary policy. Well, governments, by increasing or decreasing interest rate, can determine the direction of a trend in a market. Next, as you can guess, it's internal transactions. Well, what that means? Well, simply exports and imports in a country. The more money a country loses, for example, if we're living in a country that simply buy everything from outside, that means we're not independent financially. That means a lot of our money is basically going outside. That simply weakened the overall financial situation in overall markets and as well on a currency of the country. That weakened the situation. So internal transactions is one main factor that also determine market trend. And always remember, if a country has more exports than imports, then that country will do good in overall market trends. Next, speculation and expectations. Well, big financial corporations, or I would say politicians, also determine, they can also, their influence could simply determine the direction of a trend. So there are always speculation happening in the overall market. They tweet something, or they simply say something that they want to change, certain politicians or certain influential people, and they can simply determine the direction of, they can affect an overall market trend. And last is supply and demand. Well, simply, supply and demand also applies into certain markets, but overall, in a market trend, supply and demand is one factor that could change the direction of the trend. It could simply apply to a stock, or it could simply apply to currency. For example, if it's about a stock of a company, simply let's assume Tesla wanna give the buyers only 50 million shares of the company. Let's assume that 50 million shares of Tesla is basically available for publics to trade. In this instance, there are so many investors, for example, there are 100 million investors that want to buy those shares. In this case, simply, we have limited supply, but we have very high demand for that product, or I would say that stock. So this is basically, supply and demand also determine the market trend overall. Those were the factors that we always need to pay attention. We need to have a look at what the government is doing for overall financial situation. What are their decisions in their meetings, what they're discussing, what are their plans. Those are very, very important on determining market trend. And also, internal transactions, how we're doing. Are we buying a lot of things from outside? And also speculations, pay attention to that, supply and demand, is also a very important aspect that we need to pay attention when we're talking about market trend, or simply when determining market trend. So, now that you know what is a trend and what factors determine the trend, how many trends we have? Well, we can simply divide them into two categories. So, trend based on time and also trend based on direction. Okay, so first, based on time, how many trends are there in the market? Well, there are long-term trends, there are basically a mid-term trends, and also there are short-term trends. So for long-term trends, we can call them secular trends. For mid-term, we can call them primary trends. And for short-term, we can call them secondary trends. Okay, so now that we know based on time we have three main trends, what about based on direction? Well, my friend, based on direction also we have three main trends. So what are they? Well, we have uptrend, we have downtrend, and we have ranging markets. Okay, and what that means? Well, simply, an uptrend is a trend that market, I would say the price increase as the market is moving forward. And how we determine that a market has an uptrend? Well, simply, when the market is an uptrend, it usually makes higher highs and higher lows. What does higher highs and higher lows means? Well, simply, when the market is in an uptrend, every next high is higher than the previous high. And every other low is higher than the previous low. So basically, higher high, higher low. It's higher than the previous one. The next high is higher than the previous one. The next low is higher than the previous low. And it continues toward that direction. Well, simply, in an uptrend, market is making higher highs and higher lows. Is that clear? I think that was very simple. So let's go and have a look at example of an uptrend. So what we look at when we are basically trying to determine a trend? Well, simply, like I told you, this is the theory that we're going to use. Always remember, in an uptrend, the main move is usually strong. The candle bodies are bigger than the ones that will happen in the correction. So if I would tell you, this is basically what theory a lot of traders are using. So look, we have the initial move or the initial phase, then we have a correction, then we have another move toward the trend. So look, when it's in the initial move, if we simply look at it on one first initial move, number two is the correction, and that is when we're looking for buying positions, and 3 is the main move again. And the cycle is continuing toward that direction. Okay, so how we determine the initial trend? So simply, first very important thing, we need to determine the key levels. So let's say if this price range is the main key level, we see that the next move completely covered the previous move. So if you can see here, we have an indication that the sellers are exhausting, and then we have buyers in control, and then we have a correction, and simply Again, buyers are taking control and riding the wave towards upside. Okay, so how we recognize these impulse and correction? So simply you can call this number one an impulse and number two a correction. Well, simple as it could be, impulse are always strong. They're quick. Corrections are ugly and they take a lot of time to complete. That is when the market is testing your patience, because every moment you're thinking that this is the time, this is the time, this is the time. But simply, there are certain ways that we're going to talk about that later on how to shoot and get into the market on time. Okay, so as you can see, the initial move is very strong, and then we have the correction, which is taking a long time, and then we have the next initial move, and then we have a correction, and then boom, fast move toward upside. Okay, and how we know it's an uptrend, or how we know it's a trend? Well, usually a trend line is simply what could help us determine the direction of the trend. And how we draw that trend line? Well, simply we start from the very base of the trend and we draw it toward upside. The minimum touch we need for the trend to be valid is at least 2 touches. The more touches we get, the more valid the trend is. So as you can see, we have 1 touch here, the next touch we have here. So simply, we can draw the trend line, wait for the correction to respect the trend line, and as soon as it shows an indication that it's breaking the previous high, we can simply get into the market. Was that clear? Was that simple? I hope it's simple. So as you can see, we have number 1, number 2, number 3. So now we can simply say this is 1, this is another 2, and then here we can look for another 3. Boom, we continue to take our profit. This is how we trade on an uptrend. Okay, and simply, how the volume would look when we're basically trading uptrend? Well, simply, the initial move is strong, as I told you, with a very high volume. If you look at here, we have initial move with very strong volume. And then the correction phase has pretty much stable or lower volume. As you can see, and basically in our correction phase, which is number 2, we have pretty low or stable volume. And then on the third, the volume increase 1 more time before we get into number 3. And again, if you can see, on now we have a new 1, a new 2, a new 3. Look, now the correction phase started, and we are pretty much going downward, or we're getting in a shallow way of that volume. And as soon we are in 3 to shoot again, look, the volume increased pretty much toward upside. This is how you mix your confluences and your confirmations that the market is uptrending and you can simply buy the market. Is that clear? I hope that's clear. Okay, now that you know what's an uptrend, well then what about a downtrend? What happens in a downtrend? Well, usually in a downtrend, the market price declines toward downside. So, how we determine if the market is in a downtrend? Well, simply, when we are in a downtrend, the market makes lower lows and lower highs. What that means? Well, that means as the market is trending, the previous low always exceeds the new low. So, the next low always covers completely the previous low. So, for example, when we're saying lower lows and lower highs, that means, look, Lower low is pretty much covering the previous low, and lower high is completely covering, or I would say it's completely below the previous lower high. And it continues. Lower low, lower high. Lower low, lower high. And this is how we determine that the market is in a downtrend. Is that clear? Let's look at an example and see how it will look in a downtrend market. Well, simply, as you can see, we are in a bearish move. So we determine the key level, for example, this price, let's assume $100. And as soon as we have an indication toward downside, we see the initial move is strong, and then we have a correction, and then as soon as we get here, we get another indication that the market is going down. It goes down, made a little correction again, and it shoots down all the way. So, how we know it's a downtrend? Well, trend line, again, is a very, very important and crucial tool in determining the trend. So we start to draw our trend line. We have one touch, we have the second touch here. We are ready to go for a trade here. So as you can see, now here, the market shows that the buyers are losing control. It shows an indication that it's moving toward downside. We cannot trade. We wait. The initial move completes. The market goes on a correction, and as soon as it touches our trend line and give us an indication that the candles are still, I would say the moves are getting more strong, then simply we can get even here, or the market make a quick correction. Buyers try to take control, but they couldn't. Sellers are way too strong and they overcome the power of buyers. And it applies all the way until the trend get into another key level. So simple as you can see. 1, we're waiting. 2, the market made a correction. We wait for the correction to complete. And then as soon as it touches our trend line, we simply shoot our trade and follow it to our target profit, which is number 3. This is a very simple way to determine the downtrend, with the help of trend line, with the help of price movement. Well, how the volume will look when we're in a, I would say, in a downtrend market. Simply, volume could be a very, very crucial key, a very good confluence when you determine the market trend. So look, in the initial move, like we talked before, the market has a very high volume on the initial move. And then it made the correction. Look, we have a very shallow correction volume. And then as soon as the market starts to shoot down again, the volume increase. And then as soon as it's ready to shoot completely down, we are in a peak of the volume. So simply, this is 1, 2. So we got 1, we got 2, and then we got 3. And then simply, this is another confirmation that the market is moving toward downside. Simple as this could be. Go ahead and do an example and send me screenshots and let me know if you understand the concept of trend. All right? Okay, so now that you know what is an uptrend and what's a downtrend, what about a ranging market? What is a ranging market? Well, as you can guess, it's clear from its name, right? Ranging. Well, a ranging market is an indecision sort of market, or I would say it's a situation that buyers and sellers are fighting with each other. And the market is not making any lower lows and lower highs. It pretty much stays within a certain price range. So for example, it doesn't make any lower lows and lower highs. It pretty much stays in the same low and the same high. It's ranging between that price range. And how would you look at it in a real chart? Well, as you can see, we don't have any lower lows or lower highs. So simply we have 1, 2, 1, 2, 1, 2, 1, 2. There is no 3. The market doesn't make any 3. And how you would simply determine a ranging market? Well, a ranging market has a lot of characteristics. First of all, as you can see, it never broke the high. It never broke the high. And we simply, in a trending market, if you wanna know if we are in a ranging market or in a trending market, you look for new highs and new lows if it's an uptrend, and you always look for new lows and basically new lower lows and lower highs if it's a downtrend. But in a ranging market, we simply don't have any higher highs and higher lows. Simply the market is ranging within one price range. Simple as that could be. Always, do not be the gambler. Don't try to ride this wave. This is very, very difficult to do. So simply if you are like, oh, actually, I see that the market is ranging, so that means the market won't break this level. Or simply if you want to sell it, the market won't go below this. Well, no, my friend. You always need for the market to tell you to get into the market. We are not the ones who will decide when to trade. It's the market, the price movement that will tell you now is the time you can get into the market. And you wait for the majority to say, hey, let's go get into the market. It's not one person. You cannot change the direction of the market. I told you already, the factors that change the market trend, it's not us, it's not day traders, it's simply government, speculators, or supply and demand, or internal factors in a country economy. So look for those big events. Don't try to ride this range. Always, if you want to be safe, stay away from the ranging market. Do not trend when the market is ranging. And okay, so on how in a live example, if I would tell you, so in a ranging market, look, the market is pretty much ranging in the same, I would say, price range between certain amount of price. And how the volume would look? Well, simply it would be in a one straight line, literally. As you can see, the market is not showing you any trend on the volume. That means the market is ranging. So, two confluences, very, very important. And this is all you need. You don't need 100 indicators in the chart. You simply need to make it simple. As simple as you can understand it. That's all you need. And then how we trade ranging markets? Well, simply you wait for the market to break out of the range. And how you would know if it is breaking out of the range? We're gonna talk in our upcoming videos about fake outs and confirmed breaking of basically ranging market in our upcoming videos. So, but for now, know that we do not trade ranging market. We only trade trending markets, either up or down. Okay, so now that you know all the information necessary about the market trend and how many types of trend we have, why trend is important, why we need to know the trend. Well, simply there's a lot of factors, I would say, that's important in knowing why the trend is important. First, when you're trading in trending market, either up or down, you can earn money more quick because the moves in trending market is strong. The price difference could not take a very long time. It's quick. So that's why we want to be in the correct direction of the market. We don't want to be against it. So for example, if you want to trade the correction will drain your energy. It will take a long time for the correction phase to complete. And I don't think if a lot of us has that much patience. So simply, a main reason that we want to go with a trend is because we want to earn quick and have a lot of time going out or doing something else. Number 2, it could be a very high volume of trade in a market, when basically you're going for the trend, for the great key position to get into trending market. You're dealing with a very high volume of trades. A lot of people are getting at the same time as you. So when you are going for the trend, you are trading with high volume of trades. Next, it could be risk to reward. We're going to talk about risk to reward later, but know that a very important fact that we want to go with the market trend is good risk to reward. Usually, you'll have higher reward than what you're risking, and that's what we're looking for when we're trading. What is risk and reward? How we determine our risk? We're going to talk about that in our upcoming videos. But for now, know that when we are trading with trending market, we're basically we're looking for good risk to reward. And last, I would say not last, but one last factor that I want to talk about is going with the majority of traders. Well, simply when you're going with trending market, a lot of traders are waiting for those key trending positions to get into the market. So for example, if the market is making higher highs and higher lows, they wait for the next higher low to get into the market and to ride the wave until the new higher high. That's why it's important to be with majority. You don't want to be with minority, because majority is the one that moves the market toward one direction. It's not the minority. Is that clear? You can comment if you have any important note or any important point that why we have to go with the market trend in the comment below. Okay, thank you very much. That was it for today. I hope you could understand some very valuable information from this video. If it's your first time again, follow Elevation Trading Team in all other social media. Subscribe to our channel so you won't miss any updates. Thank you very much. Until next time, peace.